Mr. Kevin Green joins me here this morning. This is like your Super Bowl KG triple witching.
Yeah, we have a lot going on when it comes to the options complex in general. Now, that open did actually start that process. If you're looking at the SPX options that are AM settled, also looking at some of the index options, the E-mini S&P futures, the March contract has now expired as well. Looking at some of the other futures contracts, they've also expired. So there was a little bit of a runoff there. We got a little bit close to around that 6,000 level. That was an area that may have attracted a lot of that selling pressure for now. And now we're looking for a little bit of a bounce. If you kind of look at the 1 hour chart, we are pretty much hitting the 200 period moving hour average on the 1 hour. And that's also an area of support that we recently tested right around this 5620, 5610-ish area. So you want to see some buyers that really try to step in here. But this is just we're going to see a lot of intraday volatility. We talked about that yesterday. I would expect that that's going to be the same thing here today. Lack of news flow, but we do have some Fed commentary. I think Donald Trump also doubled down on the tariff conversation here, calling it a day of liberation and things of that nature. So I think the market's really kind of, once again, trying to navigate what is going to happen moving forward when it comes to policy. And then also these re-ratings to the downside when it comes to earnings for these companies. That's something that is not going to be very favorable when it comes to pricing, but it also probably will lower the bar once we get to earnings season as well. So be mindful of that. Intraday, I'm looking at 5600 as your first area, maybe getting some buyers to kind of step in. We're 8 points away from that. Any break below that, I'm looking at 55.55, and there is flows right now at 55.20. It's the third largest contract that's being traded on the session so far. So if we do have a further breakdown, those are the two key areas to the downside here. Upside, intermediate area of resistance, 56.40, and then if we are able to try to get up 5700 and then 57.35, 57.30, wide range. And rightfully so. There's a lot that's going on here. We've seen some intraday price movements that have been aggressive, both to the upside or downside. But we pretty much have washed away all of the Fed bump that we had. Yeah. That's not really a good sign going into the weekend here.
Okay. Kevin, the timing of all of the triple witching, I mean, obviously you get closer to the bell and a higher percentage of all those contracts are going to be closed out. But is there a possibility that could be front loaded? Could some of this selling be just a kind of clearing of a house within portfolios or exposures or whatever before the end of the day? Like, does it push forward any of the action? Whereas usually, we're more keyed in towards the close every day. Is that the case here even more so, or does it shift?
No, I mean, throughout the day, what you're going to see is a lot of is heightened options volume just in general. So over this last week, you're going to see, and we have seen a lot of positions being rolled both to the upside and downside when it comes to those hedges. And then today, those that do allow those positions to expire, they'll probably will be layering on new positions here throughout the day. Because if you have something that is expiring, you're also kind of losing that protection. If it's a hedge to the upside or any type of collars, you lose that protection. So you're going to see a greater amount of trading activity today. And this should be maybe the largest volume day that we actually see for the whole month. Traditionally, this is usually quarterlies are the big one here.
That's important because a lot of the days of basically from mid last week when the market first started bottoming, volumes were pretty light, but then we did have a pretty good volume day that you mentioned to us before on a stronger day. So if then we have a massive volume session here, whatever direction we go, I think then that implies you'd have a little bit more importance put on that.
On the equity front, I would say so. On the options front, once again, a lot of this is going to be very mechanical always. So I think you're going to have to separate those two things out. Let's say this. Once again, it's going to be a very
I see. You were talking just options volume.
I was just talking options.
Got it.
Yeah.
Okay.
Yeah.
Okay.
Equity volume.
Well, you think that probably should correlate to some degree with equity volume? Maybe.
Yeah, it should. But yeah, on the options front, we will see probably heightened volume today. And then on the equity side, it may give us a sense of direction. Look, if you're kind of looking at it from a vol standpoint, though, Ali, this is usually peak vol generally over the last 15 years. Peak vol kind of is like right today, right? And then next week, generally volatility actually subsides. Now, this time can be different. It may not have to follow the trend, but that is something that we need to be aware of going into next week. And unfortunately, I mean, we're pretty much at a down week right now, just given where we are at as a price level standpoint. And usually we don't have 5 weeks to the downside. And it's not really good when we do actually have those situations here. So there's a lot that's kind of going on. But what I will say, one of the bearish things that did actually happen at the open, we brought it up yesterday, it did occur here this morning. The 20-day moving average did cross below that 200-day moving average, and that's not a good trend. We can change that trend depending on price, but if you're kind of looking at the longer time frame, that is a cross to be mindful of. NVIDIA also had a death cross this morning as well, with the 50-day crossing below the 200-day. That's also not a good sign. Last time that it did that, it dropped around 25-30% to the downside here. So the technicals on the longer term time frame are kind of signaling, hey, there's probably still more downside to go here. And unfortunately, if this is our counter trend bounce that we saw, it's a very weak one. If you're a bull, you're not really too happy as far as the price action that we've seen.
I'm totally with you on that.
The lack of the ability for us to be able to hold prices higher.
Yeah, it's just it can't be said enough that, I mean, look, we do a lot of if then, and to me that's pretty much what technically, the best you can do in market analysis is basically if then, understanding if something happens, then what does it mean? That's the whole point of a correlation. If this thing does something, then I would expect the other one to do something. It's a foundation of what I think we are always trying to do here. And if this was all bulls had to offer the last week, because I've been quite optimistic, I've been finding the green shoots, they were there were breadcrumbs of hope, but that's all there's been. And we've been particular about saying that, but if that was it, then it's a bad look. If we break down to new lows, then that is a very, very listless type of market that we haven't seen in a long time. I mean, because even COVID was like just, it was panic selling and it was chaos, right? This kind of like slow drip with no buyers around, it would be something that we haven't experienced in a while.
It's a tradition. It would be a traditional bear market, right?
Which we haven't seen in a long time.
Exactly.
All we got was COVID and treasuries, but that was like bonds. That was very easy to figure out. Bonds sell off, stocks go down. So 2022 was like, even that was different. This is just like, where are the equity buyers?
Yeah, I would say if you kind of go pre-COVID, this is kind of the feeling of it, and it takes a long time for it to develop.
Well, pre-GFC, because we had no bear market from GFC to COVID, so you got to go back even further.
Yeah, that is true. What I will say though, if you consider a bear market 20% to the downside, right? If that's your marker, then I would agree with you. But if you also kind of look at a bear market as just the ability to stall out in price, and we continue to have a slow leak to the downside, we've had a couple of since GFC, right? And that's the thing that traders need to get kind of used to, or just know COVID is an outlier, and it's not a really good market to compare any type of trading action to, because it was a synthetic slowdown just in general, is a generational move, and then the fiscal spend during that time was also something that's just completely out of the norm here. Usually these cycles, they take 6 months, 8 months for them to develop, and it takes a very long time. And you will see green shoots, and we will have green weeks during those as well. So let's not call tops, or let's not call it bottoms for right now. Let's just trade the action that we have. And right now the action says consolidation, potential breakdown even further here, upside shot if you wanted to take one, probably leveraging options rather than putting straight up capital to work from the portfolio to give you a shot, but also have risk management type of strategy in place.
Love that point.
If you believe that there's going to be an upside move.
I love that point. We are at the lows here of the short term. So for futures, this is the week low right here at 56.60. So yeah, to your point, if you want to take a shot, maybe not a bad time to take a shot. I just think that if all we got was the last week and this thing breaks down, I think you're going to hear a lot more people start talking about .com type comparisons, just the lack of interest for great tech companies. Thanks, KG.